Welcome to this video on fair lending. In this video, we'll provide information about the process FDIC examiners follow to conduct a fair lending review. Fair lending reviews are conducted as part of a bank's consumer compliance examination. Based on these reviews, we recognize that the vast majority of banks comply with fair lending laws and regulations and provide their customers with access to credit in a fair and equitable manner. Fair lending reviews are conducted using the Interagency Fair Lending Examination procedures. During this video, we'll talk more about how examiners use these procedures and the process to evaluate fair lending risk during an examination, and if necessary, conduct a more in-depth analysis.
Examiners begin the fair lending review through the scoping process, which helps direct the focus to those areas that are perceived as having the greatest risk based on the bank's specific profile. Examiners begin the scoping process by reviewing the bank's written lending policies, information since the previous examination, including reports and correspondence, and details about the bank's compliance management system, or what we'll refer to as CMS, as it relates to fair lending. The scoping process will also include a discussion with management regarding the bank's lending operations. As part of this discussion, examiners will want to understand the bank's credit operations, such as the types and terms of credit offered. They will also discuss the bank's product offerings, including the volume of and any growth in the bank's credit products. Examiners also want to know about the bank's credit decision-making process, including things such as pricing and underwriting guidelines and general lending standards. There could also be questions about the level of discretion permitted in loan pricing and underwriting, or how and when exceptions to policy are allowed, as well as whether the bank has any reports that detail exceptions, overrides, or otherwise document how discretion is exercised. Examiners may also inquire about a third party's involvement in any aspect of the credit process and compensation programs for loan officers or brokers.
The scoping process also includes understanding how systems are used to make credit decisions. For example, if a bank uses an automated underwriting system, questions may include how the system is used, how the bank validates the system, and how the bank handles overrides and exceptions to the system. Questions may also center on marketing, such as the media used and if the bank has made any pre-screened solicitations since the last examination. Examiners will also review the bank's training, which is an element of the CMS. They could ask when and how often fair lending training was conducted and to whom it was provided. This could also include a review of the content of any training efforts. While fair lending complaints are not common, such information would be reviewed during the scoping process. This could include complaints received by the bank, the FDIC, or other agencies. Examiners review the content of complaints and assess whether any trends exist. The review could include an assessment of the bank's complaint resolution procedure, which is an element of the CMS. This would involve how the bank responded to any fair lending complaint, including any corrective actions taken in an effort to address the concern. Evaluating complaints can provide insights into the strength of a bank's overall fair lending program. Examiners will consider all types of credit offered by the bank as part of the fair lending scoping process. This includes real estate loans, consumer loan products, and commercial lending. The scoping process will differ from institution to institution based on the products offered and the risks associated with each product. For example, one institution could present some risk if it is offering new products since the previous examination, while another could present risk if it allows unmonitored discretion in the credit decision process. There is no one-size-fits-all approach to this analysis.
If after the scoping process, examiners conclude that there is fair lending risk that has not been sufficiently mitigated through the CMS, they may select one or more focal points for review. They focus on the areas of greatest risk and may prioritize reviews of certain matters, such as particular loan products, market areas, or decision centers. This is a more in-depth analysis, which we will refer to as a focal point review. This may involve comparing applicants to one another to assess any differences in treatment. In some cases, a focal point review may also include a statistical analysis of the bank's lending or application data. For any focal point review, examiners will conduct a criteria interview to ensure they understand the bank's credit decision process. Examiners test a focal point by focusing on specific discrimination risk factors as they apply to a prohibited basis. For example, if there was fair lending risk relating to loan pricing relative to the applicant's gender, the examiner could pick a focal point to evaluate pricing discrimination risk in more depth. This could involve selecting a product to review, such as automobile loans, and a target group, female applicants, to test the prohibitive bases of sex. In this example, examiners would test whether female applicants for auto loans were priced higher than similarly situated male applicants. This focal point analysis would assess whether the bank treated female applicants differently from similarly situated male applicants.
Once an examiner selects a product or products to review for a focal point analysis, he or she will also consider the market decision centers. This could include some or all of the bank's locations. Some banks are set up in regional areas, and examiners may select one or more of these areas for the focal point review. For example, if a bank operates in multiple states, the review focus could be limited to only a few targeted areas. As we discussed, examiners select groups of applicants to test for differences in treatment. These groups are what the interagency fair lending examination procedures refer to as target and control groups. In our earlier example, we considered females as compared to males. If a difference in treatment is noted, the examiners will ensure that the bank has ample opportunity to respond to the identified concerns.
Depending on circumstances, the focal point analysis could test a sample of transactions, or it would include the universe of all transactions made during a certain time period. Sample sizes are selected consistent with the interagency fair lending examination procedures. Examiners may select one product to analyze or multiple products, such as auto-secured loans and home purchase loans. Or, examiners may select one product but conduct analyses for multiple risk factors, such as pricing and underwriting of unsecured loans. To conduct the focal point analysis, the examiner reviews transactions from both the target and control group. Examiners generally focus on applications submitted or loans originated within the last 12 months preceding the examination, or for loans that are reported for the Home Mortgage Disclosure Act, or HMDA, then examiners generally select the prior calendar year for which there is reported HMDA data.
To document the scope and conclusions of the Fair Lending Review, FDIC examiners complete the Fair Lending Scope and Conclusions Memorandum, or FLASC. The FLASC is divided into sections and contains a series of questions and summary discussions that examiners complete to document their evaluation of fair lending risk. While the completed FLASC is an internal work paper, this document supports any fair lending related conclusions or findings that are communicated to the bank in the report of examination. The Flask template is available online in the FDIC's Consumer Compliance Examination Manual for your reference. In summary, we recognize that the vast majority of our banks are closely linked to their communities and provide their customers with access to credit in a fair and equitable manner. The FDIC's Fair Lending Reviews help ensure that banks are taking reasonable and prudent steps to maintain a compliance program that identifies and mitigates fair lending risk, and ultimately helps prevent discriminatory practices.
As we conclude, we'd like to remind you that the FDIC has technical assistance videos on a number of other topics, including other videos on fair lending that can be found on the Banker Resource Center at www.fdic.gov. There are many resources available on the FDIC website, including the Consumer Compliance Examination Manual and the Interagency Fair Lending Examination Procedures. If you need additional information or have questions or comments, please contact your bank's compliance review examiner or email the FDIC at supervision@fdic.gov. Thank you for viewing this video. We hope you found it both useful and informative.